In this video, we'll try to answer most of your questions related to gross profit margin. So watch till the end to get a better understanding of what is gross profit margin, how it's calculated, and what does it mean. In order to understand what gross profit margin is, first of all, you have to understand what is gross profit. So in simple terms, gross profit is your net sales minus your cost of goods sold. Let's imagine for a moment that you sell a t-shirt. There you go. Good color choice, by the way. So you sell a t-shirt for $100 and it costs you $55 to purchase and ship this t-shirt to your customer. So 100 minus 55 is 45. This is your gross profit. Now gross profit margin is calculated as a percentage. So $45, which is your profit, divided by your net sales, which is $100, right? So if you do that, if you look at the formula, 45 divided by 100 is 45%. So in this case, your gross profit margin is 45%. What is important here is that gross profit is calculated by only considering your net sales or your sales price minus costs of goods sold. It does not consider other costs of your business. For example, if you have an office and you have employees, you probably have other expenses as well, such as your selling expenses, general and admin expenses, depreciation. These expenses are not considered when calculating your gross profit. Your gross profit is really about your net sales and your cost of selling that product. All the other back office expenses are not included in the calculation of gross profit. They are actually included in the calculation of net profit, which we will talk about in a moment. For the time being, it's important for you to note that gross profit margin is also known as gross profit percentage, gross profit ratio, gross margin, gross profit to net sales, and probably it has many other names as well. The difference between gross profit and gross profit margin is dollars and percentage. So while gross profit is your net sales minus cost of goods sold, gross profit margin is your gross profit divided by net sales value, which is 45%. Now you may be asking what's included in net sales and what's included in cost of goods sold. Let's take a look. Net sales usually comprises of your gross sales minus your discounts and other deductions. So in this case, maybe your selling price, your listing price was $130, and then to attract some customers, you gave a discount of $20, and there are some other deductions which are another $10. Now, when you are selling one t-shirt, I don't expect you to issue the other deductions and rebates, but let's say you have a business and you have a relationship with a customer, and in that case, you have offered them other deductions and rebates and commissions. Anyway, the point is that there is a deduction which reduces your gross list price, your gross selling price, and in the end, your net sales is the difference of your gross sales minus all the discounts and deductions. Now, what is included in cost of goods sold? The cost of goods sold will include your purchasing cost, which in this case is, let's say, $40, and the cost of transportation. Now, cost of transportation could include the cost of both bringing the product to your office or location and then shipping it out to the customer. If the customer is paying the cost of transportation, if the customer is paying shipping, that cost will not be included here. But if you are paying the shipping cost, then that cost will be included in cost of goods sold. We are only going to look at the costs that really you have to pay in this case. And you may also have to pay some taxes and duties. And similar to transportation, in the case of taxes and duties, if you have what we call sales taxes that are recoverable from the government, because many businesses, they pay sales taxes on what they purchase, and then when they sell items, they collect sales taxes on behalf of the government, and in the end, they net out. They don't have to bear any cost, right? Its collection is for government, and it does not reflect on the income statement. But if you have to pay taxes and you cannot recover them from the government, then those costs will be included in your cost of goods sold. Anyway, so in the end, your total cost of goods sold is $55, which results in a gross profit of $45. Now the next question is, what does gross profit margin show? How do you interpret gross profit margin? Okay, so in this case, we have a very simple example where your net sales price is $100 and you make a profit of $45, so your profit percentage is 45%. But what this 45% is reflecting really is that on any sales that you make, you get to keep 45% after taking into consideration the costs of goods sold. But this does not include other costs, which include your selling expenses and general and admin expenses. So for every $100 you sell, you will save or you will make a profit of 45%. This reflects the profitability of your business, or it could also reflect the profitability of your product. This is very important to understand because you may have a business with more than one product, right? In your business, you may be selling multiple products. The selling, general, and admin expenses will be shared for all of those products, but you won't be able to understand which products bring more profit to your bottom line compared to the others unless you have the gross profit margin or profit percentage calculation available. You can also compare your business with other businesses. So for example, if your competitor has another t-shirt selling business and their gross profit margin is 50%, then you can ask why and where can you improve. Another important piece of information that the gross profit margin tells you is that you have a room of about 45% of your sales in this case for breaking even. So this shows that you can spend another 45% of your selling price until you get to a zero net profit. And if you spend any more than that, then you will actually start making negative net profit, which means you will actually be losing money instead of making money in the business. Now I know there is depreciation, which is a non-cash expense, which is a discussion for another video. In fact, you can click on the link in the description or the suggested video above, where I explain all of the items of the income statement in detail and where you can understand what depreciation is and all of the line items of the income statement. You ultimately want to make a profitable business. You ultimately want to make money, and it's important to know, based on your gross profit margin, how much room you have for your selling and general and admin expenses to still make profit after considering all of those expenses. In this case, for example, our selling, general, and admin expenses are $35. So 45 minus 35 is 10. So you have a net profit of 10. And then you may ask, how do we calculate net profit margin? It's very similar. Instead of using the gross profit, you use net profit, but the denominator is the same, which is your net sales. So the formula for net profit margin is net profit divided by net sales, which in this case is 10%. So you start with a gross profit of 45%, and then you end up at a net profit margin of 10%. What is a good gross profit margin? Well, generally speaking, the higher profit margin, the better, right? But you also have to balance the profitability versus the amount that you can sell. So let's take a simple example. Let's say if you reduce the price of your t-shirt so that your net sales is $70, your net selling price is $70, you are able to sell 5 t-shirts instead of 1, okay? So $70 times 5 will be your sales, which is $350. Let's assume your cost will increase in the same way. So you have $55 per t-shirt, and then in this case, times 5 would be $275. What will be your gross profit and gross profit margin in this case? If I copy the formula, you see that your gross profit is $75 and your gross profit margin is 21%. Just looking at the gross profit margin, you see that your gross profit margin has dropped because of the drop in selling price from $100 to $70. But if you look at the dollar value of gross profit, you see that it is now $75 instead of $45. Let's assume in this case, you don't incur any additional cost on your selling expenses or your G&A expenses. How will that impact your net profit or bottom line? You see that your bottom line has now changed to $40, and even your net profit margin has increased, right? So in the end, what is important is how much dollar value of profit does it translate to. If you reduce your price, you have a lower gross profit margin, but you do have a higher net profit, which goes into your pocket. And that is ultimately more important. So generally speaking, the higher the gross profit margin, the better. But if by reducing price or by reducing your gross profit margin, you are able to generate more volume, then the calculation changes and you have to consider the impact of that. A question that you may also have is, how do you add a certain percentage of margin on cost, right? So for example, you have $55 of cost and you want to add 30% margin on top of that. Well, that is a great question. And I have an entire video explaining just that concept. Because in that case, you cannot just calculate 30% of $55 and add that number on top. Because margin is a percentage of sales, is profit as a percentage of sales, not profit as a percentage of cost. So I highly recommend, if that is a question that has been bothering you, you check out that video in which I clearly explain what is markup, what is margin, how do you convert it, and how do you find the selling price if you only have cost and a target margin that has been given to you that you need to calculate the selling price for. So make sure you click on the link in description or the suggested video above and watch the entire video to understand exactly how to calculate that. Now I'm guessing that this video has answered many of the questions related to gross profit margin that you had, but something tells me you have more questions. So why don't you leave a comment and ask me those questions? Let me know what you think about this video and what other questions you have about gross profit margin. And if you haven't subscribed yet, please make sure you subscribe to my channel. My channel is about helping accounting and finance students and professionals or anybody involved in financial analysis or analysis of numbers. So make sure you subscribe and hope you enjoyed the video. Bye for now.